Before we get started, come over to ZTRADEZ.net. Check out the terms and conditions page. If you don't agree to it, don't watch the video. If you do agree to it, feel free to watch the video, which is in the description of this video below, as well as ZTRADEZ.net. And you can also join the community in the description below, as well as the newsletter. Let's jump into it. What my thoughts are on the market and what's going on right now. Seasonal sell-off is ahead of us. Something triggers something in February, usually, sometimes. I want to go over the watch list and what we had on the watch list, and yeah, and where we're at right now. You know, I had written this on Friday. I had wrote this out. Let's go ahead and see if I can drag this on over. I had SPY here. I had wrote this on Friday, went ahead and sent it out on Monday since due to the holiday, market wasn't open. But we had a rising wedge on SPY. It's funny, I read some of these books about these famous traders, and they always talk about how the talking heads lie, the charts don't. The charts were clear as day here, and then we had the whole EU stuff. That was going to do a little bit. At this point, you know, tariff scares, you know, the media always, everyone just overreacts and freaks out, just like April of this year, which was an amazing buying opportunity, but apparently it was going to be worse than the 1929 crash, the Great Depression, under a different monetary system where they can't print their way out of it. Ridiculous. So that's some of it. That's some of it. And we're going to go over the TA, and I'm going to go over some of the other stuff as well as Apple, as well as Meta, and some of the stocks that I'm looking at that are in sectors that could possibly be a safe haven. But we're going to get into all that. Let me just go ahead and finish going over the watch list here. Let's go over everything. Let me start up here at the top. SPY. So let's start off in SPY. We had the weekly here, which was in a trend, you know, and from what I see in my experience, trends will override candlesticks and patterns. Usually they will. It takes a lot to beat a trend. It takes a whole lot to beat a trend. And we were on that volume shelf there on the weekly. There's where we were in the April lows, right off that trend line. What an easy grab there. I was talking about some of the confliction. Yeah, we have a trend, but we had a rising wedge. You know, one thing people aren't mentioning, even without the EU trade war stuff, tariff dilemma, is yields are exploding. They're doing the complete opposite of what they're supposed to be doing right now. Right? Who controls that? Basically, the Fed. Mr. Too Late, if we can just hold on here, and this is kind of what we want. Now, this isn't really anything here. This is just a minor little drop. But what I'd like is a crash. Crash definition, some say 10%, some say 15%. The staple is 20%. 20% on the year is, by definition, a crash. And again, by definition of others, it's 10%. Some correction is supposed to be 10. Some say 15. Some say 20. I would love to see the market down 20% plus before rate cuts. That would be amazing. But again, Powell will be out of here very, very soon, and the guy they get in, things are going to get better under them. There'll be opportunities to make money regardless where the market goes. Volatility will pick up, and I can get entries and whatnot. Hopefully, good entries on stuff. Apple. You know, this volume shelf with this crack right here, look how weak that was. I'm going to pull this up. I know this looks small here right now, but I'm going to pull this up on the chart on TrendSpider here in a moment. You know, I wrote about Amazon. I wanted that bar to be higher than the last body, but it wasn't. And it ended up crashing. I was very confused because I'm subscribed to some other people's newsletters. One guy since like 2018, and he was like, this is flagging, that's flagging. And I'm like, what are you talking about, dude? How is Amazon flagging here? And he was wrong on all of that. He was saying that Meta was flagging. I don't know where you get a flag out of that. Give me 1 second. So we have that low volume area as well here on Meta. Very weak bounce over here. If I had RSI up, it was dropping. It's just hardly moving with that bounce up off the trend line. NVO already in that, been in that. The technicals aren't great. And I'm not going to get into that. The shooting star, I want to really cover the top 10 in the S&P right here. Some of those. Shooting star, clear as day. Like I had wrote here, I wanted this body to be a little bit higher than the prior body, kind of floating in space. That's a shooting star I'd like, but it was kind of, tied to the candle next to it. I really didn't like that. It would have given me more conviction on my bear sentiment here if that thing was a little bit higher, but that all played out. Let's take a look at Apple. Apple has done what I wanted it to do. I have pointing over here with the volume. That volume went even higher. Let's move this over. We're above that volume shelf. I'd like to see us at 241. Right around 241. High 240s. If we could come down here, that would be great. That's what I'd like. We'd fill that little gap right there. Let's see if that gap detector picks that up. It does not. Yeah, so 232 would be great. That's not happening anytime soon, but this happened pretty quick. 256 to 243. That was just one day. Again, yields are rising. We need to get Powell out now. We really need to get him out now. And in my opinion, he is absolutely playing politics. I absolutely believe he is. Before I respected him, where he's like, I'm not going to cut under pressure until the data says so. The data's CPI has been plummeting, although inflation's been up on some means of measurements recently. We got another gap all the way down there. I don't see that happening anytime soon. Let's move over to Meta. What chart was I looking at here with that? I was looking, that must have been the weekly. There it is. Beautiful. Let's go ahead and turn that. Oh, we got the EMA. What is this right here? This is the 100, coming up to the 100. Let's turn that off so it doesn't skew with the charts. There we go. How come that looks so much different than what I had up there? Let me go ahead and do this real quick. Yeah. Anyways, we're following into that low volume area. Let's turn this off. Let's turn chats off here. Here's that low volume area where that volume profile really dips back in there. We don't need MACD. We don't really need yeah, look at that divergence. Right? RSI, look how it's higher than it is right here. Yeah, we went higher, clear as day. Divergence, we're peeling off. We're dropping heavily versus the very tiny drops on Meta. Weakening RSI, and we fell. And we have that low volume area ahead. So I'm going to be keeping that on watch right around down here. That would be great. We are on this volume shelf. We're resting right on it. Let me put the EMAs back up. We had the 100. Where's the 200 at? Way down there. 50, way below it. 20, way below it. 100 is right there. We could hold that volume shelf. We could. What's really scary here is if we take a look at Tesla. Look at that dumping. Let's go over to the daily chart. We cleared the 100. We cleared the 100. Now, where was that trend line I had written out? Let me go ahead and pull that. Let's see if I can draw it. I don't know where it went. Okay, that's not going to work. You want it to touch 3 times. That's fallen in a low volume area right there. That is a massive, that is an avalanche of low volume, if that even makes sense. 354 is where the volume really picks back up. This is wild. This could get wild. Look at that gap over here at 339. I'm not saying that's going to happen in like a week or something like that, but that could happen. That could happen over a period of time. It's not recognizing that gap there. I'd like to see us come down in here. That would be great, especially with the Optimus robot and everything else. That would be great. Before they start rolling those out, what would be awesome is all the way down here, 330, 325. That would be amazing. So, what was it? PPLT. Platinum, I think, is one that could still go. I should have been looking at this in September. This was flagging right here. Flagging big time. Let's take a look and see if we can see that on the weekly. Yeah, platinum could still go, and CPR, which is a copper fund. Let me go ahead and see if I can chart that out somewhat. It doesn't have to be perfect. I should have been in that right there. 127 following day. Gosh, the run on that. This could keep going. This could keep melting up. Silver and gold aren't stopping right now. You know, speaking to some high rollers here and us people who are very educated in the market and trying to figure out where we can put money is very hard right now. It's challenging. What's beaten down? Healthcare, yeah, but under this administration and with the what's going to be changing and Obamacare going away, which basically benefited the healthcare companies versus Trump's new plan. I'm not very. I'm not up to speed on the new plan. I don't know much about it. But it's healthcare companies are not liking it at all. So, but again, platinum is one that could keep going. I'll get over to healthcare in a minute. CPR. Let's go over here. Okay, yeah, this is the index fund that I wanted. I like this. Watch them start selling copper 1 ounce coins. Wouldn't that be funny if that's going to be the new silver? Somewhat of a reversal candle there on the monthly, but the month isn't over yet. Be nice to have if we could come back down here onto this volume shelf right here. So, but things are kind of scary. And they were scary whenever, looking back on the charts, if I pulled up TOS here and I pulled up SPX or /ES and I went back far enough on the charts back to the 70s when we depegged from when everything was just a mess back then, and they depegged from the dollar and they started printing and being a little bit radical with the reckless, I should say, with the spending, and metals just went nuts. 70s were the lost decade, just like the 2000s were. 99 to 09, lost decade. 99 to 2000 to 2010 in terms of the market, right? 70s were worse. And following the crash, gold went parabolic. It went absolutely parabolic, but metals ran prior to the crash, which was rate driven in the early 80s. But anyways, I'd like to see a pullback on the copper. I really would. Copper's easier to produce. It's more abundant. It's easier to mine, and it's more abundant versus silver and especially gold. But those are just have went way too much. Some of these, in my opinion, are lagging. I really don't want to get in up there. I mean, that is insane. Let's see where the 200 EMA is. Oh my gosh, it's all the way down here at 22. I mean, that's nuts. Where's the 50? Where's the 20? The 20 is all the way at 41. This is a very, very rare scenario. Unlike this is a wild scenario that we're in right now. So, I mean, this is just nuts. Let's take a look at gold. Eagles are selling for 5K an ounce right now. This has been a way better investment than the crappy, sluggish S&P 500 that's weighted down by, 400 garbage companies that just weight the fund down. I don't believe in investing in the S&P. If you're an average Joe, absolutely. But someone who's on top of it, why not SOXX and go into some really hard-hitting, into the things that actually make the S&P move? You're really only investing in the top 10 companies, top 15. That's what you're really investing in. That's what really moves the fund, which is why I don't understand why people invest in VTI. Oh, I got small cap exposure. You have exposure, but the exposure doesn't move the fund, or it matches VU the same. It's this, you're investing in the same top 10 companies. You're overlapping if you're in both. But gold has smoked the S&P. Even up over down here, it's still smoked the S&P, $40 to 200. And SPY's up 4x since this period. Gold has been a better investment. Money managers don't like to hear that. They just get kind of quiet. It's like it triggers them. So PPLT is one I'm going to watch. CPER, look at that consolidation. I mean, that is just nuts with the hammer right there. If I had been watching that, I was looking at that I was looking at this fund back over in here somewhere and just kind of forgot about it. We had that hammer right there on the monthly before the break. It. If I had saw that, that would have been a dead giveaway. 88 to freaking 225. Things went up a lot, a whole lot. Let's take a look at a 4 hour on that. There's a lot of miners. There's a whole lot of metal miners that are really, really. Let me see if I can pull up one of them. I think we posted this one. I don't remember where. Was it in? It was somewhere over in here, like 70 cents. It's a buck 84. I think it hit 193 today. It's done very, very well. But there's some metal miners on the OTC that are lagging. I'm not saying this one is, but there's some other ones that I'm going to be pulling up in the future here that I'm going to be taking a look at. But that's the problem that we're going to run into in going forward here is where can I allocate some of my gains, right? If I take a realized loss on something, then I have to take a realized gain on something. I can't just take realized losses and hold my unrealized gains and then have that drop. I take a loss, I got to take a gain. That's just one of my rules. So it's going to, again, healthcare it's going to be very challenging. Healthcare NVO looks it looks great. And I'm in that. I'm in NVO. This could end up coming back down here to this volume shelf 57 and creating inverted head and shoulders or a cup and handle, whatever you'd like to call it. They're very similar in shape. It depends if it's going to form a handle or not. It'll be a cup and handle. But anyways, it coming back down and retesting this high volume area would be great. We've got that gap all the way up there to 86. Let's go ahead and turn chats on, or not chats, but the gap detector. Yep. Let's take a look at the 100. Where's the 20 at? Where's the 50 at? 50's up there. I'm sure that's going to be some resistance. So other than that, this whole Greenland stuff, the media is blowing it up. Like, oh my gosh, can you believe this? See, we told you so. It's like, this is just the normal cycle. Good news, bad news, good. If you look at it like that, good news, bad news. There's a good cycle, a bad cycle. You're in a good cycle, you're buying now, you're buying ahead of a bad cycle. That's why I like buying in bad cycles, because I'm buying ahead of a good cycle, right? This will blow over eventually. The trade agreement stuff is not going to stick, the bad stuff forever. Both countries are going to want to get this gone immediately and want to come to a resolution here. So, but what everyone should be worried about isn't, arguing over the fact that Greenland is protected by two men with dog sleds. Basically, I'm exaggerating, and Orange for saying that is exaggerating as well, Orange Man. But it's the bond market, the runaway bond market. That's what's worrying me. That is what's freaking me out right now. Screw this. They sign a piece of paper, the problem goes away with the EU and the US. They come to a phone call, right? The bond market is terrifying me. I'm going to do a separate video on this. I'm going to write an article on this. That's what's got me worried. In fact, I may follow this up with an article on the bond market and what's worrying me right now. Taking a look at the 10-year. Yields are rising, and that's not good for the stock market at all. If you guys like this content, make sure to like and follow for more. I'm going to follow this up with an article. Keep your eye out on the blog at ztrades.net.